Good morning. My name is Scott Redler, Chief Strategic Officer at TWTR.com.
And I'm Amelia Martyn-Hemphill, and together we bring you Morning Call. Mixed markets around the world as Asia is broadly lower, the Shanghai down 6.2% there. Europe seems to be flattish, not paying much attention to that, it looks like.
Yeah, it's like all of a sudden, here we go again, volatility picks up. In China, it felt as if everyone started to fall asleep over there, where you had this small bounce off the lows, was out of the headlines besides the yuan devaluation, and then boom, you wake up today and the Shanghai's down 6.1%. So the question is, can we ignore that again? You look at the chart of the FXI, we talked about this, once it broke the 49 area, and then the potential of this bear flag where you have this big pole, and then you have this flag type setup, and figure that if we would have resolved to the upside and bounce back up, perhaps not a headwind. But if we were to break below this 39 and make new lows in the Shanghai, chances are, the markets will notice because the next real level doesn't come in on the FXI all the way down to about 36. As far as Europe not being down, I guess that's good because it's helping our futures not take it too much on the chin. But overall, you look at the HEDJ and it's not looking as healthy as it did either. You have a big gap down here, now getting below the 200-day. So I know it's trying to hold this spot, but if it were to trade below 61.41, it's heading back to lows. So as of right now, overseas providing a lot more of a headwind versus a tailwind, to our markets.
And our markets absorbed early weakness yesterday to close strong. Do you think that could happen again today?
It'd be nice. Yesterday you had hit, pretty hard with the Empire manufacturing data, and we went green. We held where we had to. So will we hold where we have to again to keep this bullish, constructive tape intact? Because you have this big range, and the range has been getting frustrated. And every time it looks like we might get going, the kitchen sink keeps getting thrown out of our markets. You look here at the SPX, and you will see. Granted, this is the big range. Let's take a outside look at it. You still have the lower level here. Okay, last week you had that big reversal, right around 2067. And then it did seem as if, maybe during a quiet week, we could, pop right back towards the highs. So, at this point, we'll see what happens today. I'd love to see this area hold. Okay, this is where, yesterday we held where we had to at 2080. So that's big time support. And then I would say it would be very constructive if we could hold above this 2092. And if you look at the spiders real quick, that spot for the spiders is right around this 209.50. If we fail to hold 209.50, I'm sure some momentum players like me will probably say, okay, I have to have a little less risk on just in case. And then, more of the intermediate to macro guys will probably be looking towards this 208.
Technology helped lead the way yesterday. What are some levels to watch in the Qs, Scott?
Well, when you're down, you need leaders to lead. So we'll see if technology could do that. And the Qs, did work well yesterday. It did have a decent push. So, Amelia, you're right about looking at this particular sector. It did hold this area yesterday. This was 109.86. It tried to break above this small descending channel. Let's hope it's just not hopefully it doesn't get engulfed today, because it could. We've seen this in this market before. So, for this to be healthy, I would think 110.88 could hold and then put another inside day and close off lows. If this doesn't hold and we head back here, it's going to be hard to hold on to active long. So we'll see if technology could lead.
And the bios and the Russell, which has lost some relative strength in the past month or so, acted well yesterday. Would you look for that to continue today?
It would be, it would be nice because those were leaders and they started to fail us, so to speak. And with the dollar strong and that being a headwind, there's not as much dollar type exposure for the Russell and the bios. So maybe money does come there today. And you had a decent move yesterday. They closed on high. So we'll see if you could buy the dip here today. You look at the bios. This trend somewhat changed a little bit when it broke this spot right here. Okay, and broke below the 50-day, and then you did hold this lower pivot. So it would be kind of it would be unconstructive to see give back all of yesterday's gains, and then more people will come out and start being very bearish in the sector. So you take a closer look at the IBB, to see what you'd like to see hold today, or I would like to see hold today. This 366-ish. If it could hold half of yesterday and go green, that would be a big constructive. Okay, but it's, again, still you have to be a little skeptical when the 50-day, which held for so long, broke, as well as this, as well as it being on the right side of this trend. Then you go to the Russell also. Just took back the 200-day. This has been relatively weak for a while, ever since this breakout failure here where it couldn't hold above the prior gains right there, and then came in, made a higher or a lower high, I'm sorry, and then it's been making a lot of lower highs. And then here is this descending channel. So the question is, could it get more constructive and get back in play? Breaking above that would be the case. So maybe today, in a sea of red, it tries to show some relative strength, and I think holding maybe 120.80 would be good, and then perhaps breaking this downtrend would be more bullish than bearish.
Stocks were on the move yesterday, and when futures are down, as we know, you have to look to the strongest players. Do Google and Amazon still qualify for that?
They do qualify. It's just that they're always loose and wide, and they want to test every trader's patience. So I will see if they can go green. I am long both of those, small, so I'll, just in case we were to continue yesterday's momentum. So today I'll see if they can go green and maybe show more relative strength. You look at Google. Overall, it's been holding this gap, which is healthy. It did let the 8-day catch up. It did come above this little small pivot, so that's why I went long it. So we'll see if it could hold. I'll give it some time, because if the market does get strong and the U.S. leads, this could take out the 700 level. So as of right now, we'll see what happens here with Google. Amazon, also one of the same type of names, had a big gap up after earnings. It's been letting the moving averages catch up. It's above the 8-day. If we were up today, this would have been up. So we're not up, so we'll see what happens. 527 is support. If it were to trade through this 538 with authority, it could go. You have a lot of earnings right now. I'll just get into it real quick. You have Home Depot and you have Walmart. Okay, Home Depot has been strong. It's up a little bit. I don't think I would chase Home Depot up here the same way Walmart being lower. Okay, I don't think I would be looking to short, Walmart below this little pivot. Okay, so see, if it can get back above this 70-ish area, I would maybe look for a cute long in Walmart. Otherwise, just look for psychology, because if it goes below this and keeps going lower, chances are, it could be negative. But if it shows that, this big move from up here down there is priced in, it could help overall.
Netflix upper pattern looks quite tight there. Will that be a focus for you? I know you're long some of that.
I am long, and it'd be good to see, you go home long and you'd love to see futures up and things up a little bit, giving you easy money. But sometimes there's more money to be made if the futures are down and if your stock shows relative strength, because a lot of us could get more shares and feel more comfortable intraday. So if you look at Netflix, this is, a nice tight pattern. Okay, last time it looked like this, it broke out above this, 115 and went going, or got going. So here we are again. If it could show some relative strength and look to go green, I would be a buyer of this above this 125.76 to see if it could help lead the way. This has been the strongest name out there. A little tricky when you get base on base on base moves, but I will be focusing on this in the first 30 minutes or so.
Apple's been acting a bit better, but it doesn't seem to like it when China's looking weaker. Do you think today could be a decent test for its direction?
I think it'll be like one of those litmus tests where it's weaker, but it's bouncing. China down big, it's down 80 cents. And like Amelia said, if this has almost been like a reverse ETF. Every time the Shanghai's down, people are like, oh, they're not going to buy iPhones, so we have to just trade Apple down. So we'll see what happens today. I'm long still a little bit. If you look at the chart from yesterday, it looked as if it's been trying to act better. Here is your red dog reversal right here. Here is where it held higher again yesterday. So I would say if this could hold around 116-ish, that would be good. And then perhaps I was thinking it could trend a little higher during this low volume time. It still has a heck of a lot to prove, so if it fails today, I will be out of it. I actually nibbled a little bit more coming in pre-market, and I was thinking perhaps we come up and retest this spot, but obviously it doesn't have to. Still below the 200-day, below the moving averages. Apple has a lot to prove, so if it happens to go green today, it could prove that down here in this area, it's a better buy than sell.
And let's take a quick look at social media. What does the landscape look like there?
Kind of the same as it's been. You have Facebook as the leader, great stock, trying to rebuild since earnings. You look here, it's at that lower area where, I do think, it could be worth some attention. I have a feeler on. It had a nice red dog reversal into this 91.80. So, there's also a small pivot here. If this were to go green, you might even get a nice little trade above this 94.72. And then the next real resistance doesn't come up to there. So if Facebook wants to help lead today, it perhaps can. And then, the two laggards that, have been laggards, maybe there's some kind of cash flow trade. As long as this Twitter stays above 28.5, maybe above this 29 and change, you get a quick little active cash flow move. And same thing, I guess, for LinkedIn, where if you weren't caught in this mess, and it's been a mess, and I don't think any of us have been, it's trying to go sideways down here, and maybe with a little volume, there's also a small trade to the upside. But these are cute trades in broken names. LinkedIn, Twitter, broken names, Facebook. A lot of money still in there trying to support it and protect it. It's holding the 21-day. Hopefully that continues.
Seems like we have this same story of a stronger dollar, weaker oil each week. Is it getting harder for the market to ignore that?
Usually when things aren't at new lows, the market does a great job ignoring it. But when you have the headlines, 6-month lows or multi-year lows, again in oil, etc., it's hard to ignore. So if you look real quickly at the USO, it's been trending lower, ever since breaking this spot right here. It just has been, basically a drip grind lower. So now I guess you could say, if you're looking to do anything here, which a lot of us haven't done in so long, here is your pivot low in the USO. It's right there. That is, what is that, right down 1386. Maybe it breaks below it, comes back above it, and relieves some pressure. Every time it's done that, it's been sold, and that's why you stay away from downtrends. As far as real quickly the XLE, it's trying to hang in there. We've talked about how, this head and shoulders pattern was your sell signal, your 200-day was your sell signal. Now down here, maybe there was a trade, and there's been a decent trade. But again, if oil continues to make month or year lows, chances are it's hard to stay up. So at this point, watch the XLE. If you're in it from yesterday because you thought perhaps it found support, give it to this 68.77. Hopefully that holds there for continuation. And then let's just switch a gear to the metals. Metals are actually acting a little bit better for themselves. So with that being said, if the market doesn't gain some of its footing, maybe there's a small trade here in the GLD to take yourself back north towards this 109.38 level. And so far there's been some decent lower level trades here, but just make sure you don't stick around too long if the music stops there.
And that is your morning call. Happy trading. Have a great day.